This is Muralidhar Reddy from Spandana Institute of Commerce, Hyderabad, Dilshuk Nagar. Now, our present topic is what entries were required at the time of internal reconstruction, conducting internal reconstruction by the company. So, here already we are discussed in the previous classes. So, what is the reconstruction? So, what is the reorganization? Reconstruction means if company reducing their assets as well as only owner's capital funds none. So that is internal reconstruction. If company was doing reducing of what I call assets as well as owner's funds capital as well as outside liabilities, that activity name called as a reorganization. Now I am explaining so with the comparison in between reconstruction and reorganization. So all the general entries related to that none. First one, if company now decided to reduce their preference share capital, that is this topic. If preference share capital was right, so reduced none. Take one example. 10% rate of dividend payable, number of preference shares in the company held in the company 10,000, 10% dividend payable, rate of dividend payable 10,000 preference shares company has none, each one 100 rupees face value of the each share, paid up value is 100 rupees. Now they are decided to reduce as 8% payable rate of dividend, number of shares 1000 preference shares. They are now decided to reduce from 10,000 numbers to 1000, as well as old equity preference share is value of the old preference share is 100. Now they are decided to reduce as 10 rupees, means old value is 100, new value is 10 each share value. Next, old number of shares are 10,000, new number of shares are 1000. Old rate of dividend agreed to pay 10%, presently they are converted as 8%. In this case, what entry we are required? Check it here none. First one, company held at the old balance sheet 10,000 preference shares. Now they are decided to convert as 1000 number of preference shares only. Next, old value 100, new value 10 rupees, means each share value company reduced by 90 rupees, decreased by 90 rupees from 100 to 10. So to conduct this activity, what general entries we are required in case of reconstruction, in case of reorganization? That is our present entry nana. So what old percentage they are given in the question? 10%. Debit with 10% preference share capital. Why? Because capital always has the credit balance. To reduce that balance, debit now. That's why I am debited in the entry nana 10% preference share capital account at R. So true. To raise the new capital, please credit on the name of 8% preference share capital. This old preference share capital, it is given in the old balance sheet. So now company decide to convert as 8% preference share capital. That's why I am debited with old capital amount. I am credited with the new capital amount. Old percentage according to old balance sheet 10%, according to new resolution. Okay, so 8%. So if we are multiply old number of shares 10,000 into 100, we will get the 10 lakhs rupees. If we are multiply with 1000 number of new shares into 10 rupees, we will get the 10,000. So difference in between this 10 lakhs and 10,000 was equals to 9 lakhs 90,000. These 9 lakhs 90,000 please credit to the capital reconstruction account in case of reconstruction. So in case of reorganization, so please pass the same entry 10% as a preference 10% preference share capital account at R to 8% preference share capital. At year, in place of capital reconstruction, please write as a capital reorganization, means 10% preference share capital account at R to 8% preference share capital to capital reorganization. In case of reorganization, show it here to capital reorganization. In case of reconstruction, please show as a to reconstruction account 9 lakhs 90. So that's why here 10% preference share capital to 8% preference share capital to capital reconstruction. Here 10% preference share capital to 8% preference share capital to reorganization account with the same amounts 10 lakhs 10,000, 9 lakhs 90,000. Narration being 10,000 number of old preference shares, each 100, now converted as 1000 number of new preference shares, each one 10 rupees. That is our narration. Please note down it here. Next one, after that, company if decided to reduce their equity share capital. Take one example, Nana. In my present example, so old company has the 1 lakh equity shares, each one 10 rupees. Now this company decide to convert as 1 lakh new number of shares, equity shares, each one 1 rupee. So now for your understood, Nana, so I am showing it here. Old number of shares given as 1 lakh, new number of shares also 1 lakh, 1 lakh, 1 lakh. This 1 lakh I am taken it here. This 1 lakh I am taken it here. So old number of old share face value is 10 rupees. New share value is 1 rupee. So to what I call do this activity in the company accounts books, this entry we are required. Debit with old share capital account, that is 1 lakh into 10. Credit with new share capital account, that is 1 lakh into 1 rupee, 1 lakh. In between difference in between these 10 lakhs and 1 lakh equal to 9 lakhs. This amount please show on the name of capital reconstruction account in case of reconstruction. In case of reorganization, to capital reorganization. Show it here. Narration being 1 lakh old equity shares, each one 10 rupees, each one 10 rupees, converted as 1 lakh new equity shares, each one 1 rupee. That is our present narration. Next one, Nana. Third one, D. Third entry, no, that is third entry. It is second entry, actually third entry, Nana. If company reducing outsider liabilities, when company will reduce the company outside liabilities, Nana, in case of reorganization only, means this activity in generally they can provide when they are provided this transaction in the question, that situation, that activity called as a reorganization activity, not a reconstruction. That's why, so please let's complete it. If company was reducing creditors by 10,000, creditors by 10,000 means reducing value 10,000, last value 10,000. It is not a old value of the creditors, it is not a new value of the creditors. In between the old liability, in between the new liability, how much difference is there, Nana? That is reduced by value, Nana. So say next one, creditors reduced by 10,000. Old value of the debenture creditors 7,000 according to old balance sheet. Now from this 70,000, they are decided to reduce 10,000 rupees. Means new value comes as 60,000. So in the new balance sheet, okay. 10% debentures old value now as 80,000. Means according to old balance sheet they are given as a creditors 1 lakh. Now decide to convert as 80,000. Means reduced by 20,000 here. So again, Nana, according to the old balance sheet they can provide 1 lakh. According to the new balance sheet, according to new reforms, new resolution, they are decided to convert as 80,000. Means it was reducing by 20,000. So to conduct this activity, one more entry is required, not in case of reconstruction. This entry is required in case of reorganization only. So what entry we are required, creditors is one of the liability. Liability is always at the credit balance. To wind up or to reduce that balance, something of that balance, show debit on the name of debit, creditors account debit with 10,000. So how much we are reducing from the creditors? Show it here, that one. Next 5% or 15% debentures. 15% means old agreed rate of interest on the debentures is given as 15%. Old debenture value given as 1 lakh. So now they are agreed to pay in future the interest amount on the debentures 10,000. So debenture liability they are decide to reduce to 80,000. That's why I am debited with 1 lakh, I am credited with 80,000. I am debited with 15,000, I am credited with 10%. 15%, 10%. That is I am showing it here, Nana. Creditors account at are 10,000, 15% debenture. This is old debenture percentage, interest percentage. It is available in the old balance sheet. Next, Nana. So in general, it is available in the old balance sheet. The 1 lakh also it will available in the old balance sheet. 10% new debentures. This is according to the resolution of the company, Nana. Now they are agreed to pay interest in future 10%. So liability value 80,000. To difference amount in between the all values, Nana. So 10,000 plus 1 lakh. By adding these two, we will get the 1 lakh 10,000. 1 lakh 10,000 minus from that 80,000. Difference amount will arise, Nana, as 30,000. These 30,000 we should adjust to the capital reorganization account. Capital reorganization. When we are conducting reduction of the creditors value, Debenture values means third party liabilities, means outside liabilities. These such type of activity called as a capital reorganization. Being creditors are reduced by 10,000, and debentures are 15% debentures, 1 lakh debentures are converted as 10% debentures to 80,000 rupees. Next one, fourth one, if profit and loss account balance, any given at asset side means debit balance nana. If any goodwill now decide to wind up, if any patents are we are written off, if any copyrights we decide to written off nana, if we are any trademarks are decide to write off nana. Next print expense are if any given in the question balance sheet nana, whole balance sheet. Next underwriting commission if any given is available in the whole balance sheet. If discount on shares and discount on debentures is available in the whole balance sheet. Next these all items we should write off at the time of internal reconstruction or in the time of at the time of reorganization situation. So in generally these all values they can provide in the old balance sheet. From this balances, how much we are reducing, that much with that much of amount nana, show as a credit on that all assets to profit and loss account, to goodwill, to patents, to copyrights, to trademarks, to preliminary expenses, to underwriting commission, to discount on shares, to discount on debentures. How much now they are reducing from these balances? With that balances, show it here. If any tangible assets also we are reducing nana, show here. Two tangible assets means like two building, two motor vehicle, two paid furniture, etc. How much we are now decide to reduce from the tangible assets, that one also show it here. Otherwise only show in the problem entry. So profit and loss account balance, what they are given the question, goodwill amount how much we are written off, next writing off, next patents how much we are writing off, that much of amount please create these all assets nana. So by the adding this all credit values nana, so how much will come, that amount show it, take it here, 18,90,000 on the name of capital reconstruction account. So sorry nana. So here, so what amount we are created here capital reconstruction account, what amount we are created here capital reconstruction account, by adding these two how much amount will come, that amount show it here. After that please deduct these all values from that above value, so some difference will came, so that amount is called as a capital reserve account. We should adjust what difference is arise at here, that amount please or transfer to the capital reserve account. In the future balance sheet, this capital reserve balance we should show nana under the owner funds. Owner funds means in the new balance sheet it will come at here. In the new balance sheet it will come under the new balance sheet nana. Under the new balance sheet, under the shareholder funds, we can show that capital reserve balance at here 60,000. These 60,000 we are taken from the fourth entry. That 60,000 is difference of the fourth entry. In between the fourth entry, capital reserve balance 60,000. So this amount we should consider in the new balance sheet. Next one, if it is a reorganization, in that case, debit the capital redemption amount with the how much amounts we are created in the above entries. Two capital reorganization at year, that is 9 lakhs. Two capital reorganization at year 90, that is 30,000. So 9 lakhs. Year actually 9 lakhs 90,000. Year 9 lakhs. Total 18 lakhs 90,000. 18 lakhs 90,000 plus year 30,000. Total 19 lakhs 20,000. I am taken at year. So on the name of capital reorganization account, 19 lakhs 20,000. To profit and loss account, how much now we are writing off? To goodwill, to patents, to copyrights, to trademarks, etc. If any if any tangible assets also we are reducing, to pay furniture, to motor vehicle, what we are reducing on that name nana, please show it here, that much of amount nana. After that, find out difference in between debits and credits. Some difference will come. The difference we should write on the name of to capital reserve 60,000. Narration being capital reserve balances or utilized for to write off the various profit and loss and balance or intangible assets or tangible assets, etc. So this is the fourth entry. In generally, by the passing these four entries, we should conduct nana internal reconstruction or reorganization. So that is our already journal entries nana. After completion of this journal entry, again we should prepare new balance sheet. That is balance sheet of I am taken as a X company limited here. So name of the company is X company limited. Balance sheet of X company limited as on 31st December 2020 or 31st December 2019, whatever it may be, when we are conducting, on what date we are conducting reconstruction activity. So after next date of the internal reconstruction date, nana. So that is we can show it here. For example, we are conducting reconstruction activity on December 31st, year 1st January. Suppose we are conducting a reconstruction activity on May 31st, year we can take and June 1st, etc. 2020. But here, after completion of this sentence, Nana, please show in the bracket unreduced word. Unreduced word, Nana. These what I call unreduced word is we can specify on the top of the future balance sheet up to the 5 years, after completion of our reconstruction activity. Why? Because this unreduced word is very useful to the future investors in our company. So who are interested to invest in our company, Nana. So it is one of the reminder to that fellow future investors, Nana. Okay, so why? Because they indicate old investors among our company, some of the what I call destroyed, Nana. Our company reduced, Nana, some of the amount of the old investors of the our company, existing shareholders investment. So our company what I call reduced, Nana, by the some of the amount. That is indicate this unreduced word. Right now I am showing, Nana, I am taking here shareholders and liabilities. This is nothing but liability side. So under that first one is shareholder funds. Shareholder funds, another name called as a owners funds, another name called as a owner's equity. In that there are two parts, Nana. So first one is share capital plus reserves and surplus. Share capital plus reserves and surplus, they both in the part of shareholder funds. So now I am taking here, Nana, first share capital. In the share capital, first topic is equity share capital, Nana. Please show here new number of shares, new share value of the equity share value. Now in our company, new number of equity shares are 1 lakh, each one value 1 rupee. It will become as 1 lakh. Next, new 8%. Actually in the old balance sheet they are given actually 15%, 10%. The 10% our company converted in the part of internal reconstruction as 8%. Now that's why I am taken here new percentage, 8% preference share capital. So 1000 into 10 rupees, 10,000. So right, so total share capital equal to 1,10,000. Add to that reserves and surplus. Under that reserves and surplus, one topic is there, that is capital reserve. This capital reserve, how can we know, Nana? This is difference of the fourth entry. What difference we are having in the fourth entry, the difference amount we should consider it here. Okay, if not available in the any difference in the fourth entry, here we should not consider any balance, we should consider as a zero. Right, 1 lakh plus 10,000, 1,10,000 share capital plus 60,000 reserve capital reserve balance. Total amount of the equity shareholder funds, total shareholder funds equal to 1,70,000. After that, long-term borrowings. One more heading. Here, please take the new percentage of the new debenture value with the new percentage. Actually, in my example, I am taken old debentures 15%, new debenture 10%. That's why I am taken as a 10% debentures. So new value 80,000. Why? Because it was reduced from 1 lakh to 80,000. 280,000 means new value to be considered as 80,000. Old value is 1 lakh. So last value we are adjusted in the third entry. So remaining new value I am taken it here 80,000. Next, bank loan, if any given in the question. Any other long-term borrowings, if any given in the question, old balance sheet, that one also here please consider it here. So this amount total is equal to 80,000. But one small thing, Nana. Here, if it is reconstruction, it will come as 80,000. If it is reorganization, fourth entry difference will come as a 1 lakh. That 1 lakh we are required to take it here, Nana, in place of 80,000. In the reorganization, we should consider as a 1 lakh. In reconstruction, we should consider as a 80,000. Total amount 80,000. Next, year after that, current liabilities. If any OD is given in the question, if any bills payable are given in the question, if any outstanding expense given in the question, if any advance incomes received in the given question, next, any short-term loans are given in the question, if any tax liability given in the question, such type of liabilities also we should consider it here. Next one, creditor balances. So suppose in the given old balance sheet 70,000. So reduced to how much? Reduced by 10,000 means loss incurring 10,000 from the what I call to the creditors, right? 70,000 from the 70,000 we are reduced 10,000. After reducing the 10,000, reduced by the 10,000, our new creditors will come as 60,000. So total amount become as 60. So these, by the adding 170 plus 80 plus 60, it will come as total 3,10,000. This is called as a total liability, also called as a total equity. Total equity, total liability. Okay, total source of the funds 3,10,000. Next, also please prepare asset side of the balance sheet. Continuation of this one, Nana. Continuation of this paper. Next page. After the continuation of this one, Nana. Now, so it is asset side, Nana. As the asset side, first one I am taken as a fixed assets. Fixed assets, another name called as a block. Under that, first I am taken showing intangible fixed assets. For example, goodwill in the old balance sheet 50,000. When we are conducting the internal reconstruction, our goodwill become to 0. That's why I am not taking a T amount here, a T amount. This is generally this amount is available in the old balance sheet. We can reduce the total entire amount, Nana. After reducing of that entire amount, new value become as 0. Patents, by the taking old value, how much we are reduced in the third of last fourth entry, that one, Nana. So difference amount this one. Next, copyrights. Similarly, by the taking old value, please subtract the new value, reduced value, new value will come. Next, trademarks. Next, another one is, for example, these all, Nana. So by adding this all, we will get the 80,000. Next, now I am showing Nana tangible fixed assets. Under that, building. Building, this 50,000 is generally available in the old balance sheet. If any amount is reduced by the company, reducing by the company, that amount please deduct it here. So remaining balance take it here. Motor vehicle also similar. Next, furniture also similar. By adding this all, Nana, this amount, total amount will come as 1,90,000. So next one, I am taking current assets. Another name of the current assets called as gross working capital, also called as a gross revolving capital. Next, in that I am taking first cash in hand. In generally, it can provide in the old balance sheet. Next, debtors, it can provide by the old balance sheet. From that, how much now I am reducing that one, please deduct that one, Nana. After deduct the that reduced value, Nana, from the old value, some new value will come, Nana. Next, stock, similarly do the stock also. Other current assets, any other currents are given in the question, that one also take it here. So after the total of this all current assets equal to 40,000. So current assets plus fixed assets is equal to total of the assets. This is the procedure when we are conducting internal reconstruction as well as reorganization activity. Okay, if you are like this explanation and notes, Nana, please subscribe my YouTube channel, Nana. Okay, thank you.